Hello, and welcome to another episode of CM Tribe Learn. Here, we break down complex topics so anybody can easily understand them. At the end of this video, you'll know what the stock market is and why you should get into it. Let's get to it. Stock investing is one of the core pillars of any global economy, and will likely continue to be so over the next 100 years. Here's what you need to know about this trillion-dollar market. Let's start with a simple one. What is the stock market? The keyword here is market. And like any market, it's simply a designated place for buyer and seller to meet. Except, in this case, this market trades stocks. Okay. So what are stocks? And yes, this is something even children should know about. Stocks are simply a unit of ownership of a publicly traded company, which is then measured in shares. The more shares you own, the more of the company you own. This type of ownership is known as equity. So if you hear people saying things like this person owns 15% equity, or has a 15% equity stake in a company, it just means the person owns 15% of that company. Owning up to 15% equity in a company is a big deal, especially if it's a company that experiences strong growth over the next couple of years. In fact, owning sizable equity stakes in profitable companies is one of the most common ways through which billionaires are made. In this way, the stock market raises capital for a company. The company can then use this capital to fund new product lines, invest in its growth, expand its operations, or even pay off debt. The most popular examples of stock markets today include the New York Stock Exchange, NASDAQ, and the London Stock Exchange. Shares are worth investing in for three main reasons. Firstly, they can go up in value, which means you get a capital gain when you sell them. Second, the company may also pay out dividends, a proportion of its profits, to its shareholders. And third, investing in stocks early can provide you with a nice big nest egg to live off when you retire. You can also use the stock market to protect your wealth against inflation. Historical data has shown that in a high inflation economy, it is better to own stocks than store your money in the bank. With that in mind, how do you buy or sell stocks? You can buy stocks through an initial public offer. An IPO represents the first ever time that a company lists its stocks for sale to the public. This means you're buying shares directly from the company. Or, you could use a stockbrokering agency. These are accredited middlemen who provide a platform for buyers and sellers of stocks to trade. Today, there are many online stockbrokers that allow you to buy or sell stocks directly on your mobile device. How do stockbrokers operate? Let's see a quick example. Ben bought 1,000 shares of ABC Company stock at $3 per share. This means his share value in the company is worth $3,000. 2 months later, ABC Company is doing really well in business, and its stock value is now $4.50 per share. Ben's share value is now up from $3,000 to $4,500. So he decides to realize his capital gain by listing some shares for sale through his online stockbroker. This is known as a sell order. Every sell order comes with an ask price, which is the price that the seller wants for his stocks. On the other side of the trade, Ava has recently heard about ABC Company's success and wants to buy its stocks. So she signs up for a trading account with the online stockbroker and places a buy order for the stocks. Every buy order comes with a bid price, which is the price the buyer is willing to pay for the stocks. If Ava's bid price matches Ben's ask price, the stockbroker executes the trade. Of course, he'll need to be careful when trading. Just as the value of the stock can go up, it can also go down and result in heavy losses. This is where stock trading strategies and analysis come in. We'll look at these in the next lesson. We'll also look at the basics of stock investing, bull and bear markets, stock valuations, and how to select stocks to trade. See you there.